we're going to have our weekly daily live trading room. It's good to be back. Let me know if you guys have any questions. Let me say hello to the Discord. Guys, it's been a while. All right, 3. All right, we have our Discord, guys. All right. Michael, good morning. Ted, it's good to be back. William, good to be back. Bill, Faust. Faust. Bob. Fred. Teresa, well, good to be back. Chat, Fred. Thank you, Fred. Appreciate it. Scott, always doing a good job. Guru, good morning. Tom, interesting times. I missed you guys too. It's great to be back. Thank you, my Albert. All right. Now let's start then. Discord community, I encourage you to type in your questions in the live chat, stream chat. Type in stream, go to stream chat and type it. Let's start. I'll be sure to answer any questions you might have. Welcome to TradeSpoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of the Yellow Tunnel and TradeSpoon. And today we're going to have a live trading room open to trade stock and options and help you navigate current market volatility. This is my brief bio for those of you who are new. If this is your first event, do me a favor, type in first. Always want to welcome new subscribers. You can do that in the stream chat or in the questions box on the GoToWebinar platform. Disclosures are very important. I'm going to go through specific trading examples. So trading stock and options, it's important to read the disclosures. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risks and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal past performance, and you can see the relationship between TradeSpoon and Trading Block on the bottom of your screen. All right, so there are very important rules in trading. I encourage everybody to have a trading plan, and again, write down those rules. First one is portfolio allocation. I would encourage you to consider an average 30% portfolio in cash. Market is volatile. I think it's going to stay volatile throughout this year. So if last year you were 30% on average, this year it should be 40-50% of your portfolio in cash. Second one is portfolio drawdown. Probably the most important rule, which will make a difference whether long-term you can consistently outperform the market or not. What is portfolio drawdown? Basically, it talks about the formula is number of position times the maximum loss per position, right? Portfolio position size. So it's very important to get that rule correctly. I propose to have 4 positions, no more than 4 positions at a time, with maximum loss of, on average, 4 positions at a time, right? On average, 4 positions at a time, with maximum loss of 2.5% of account value per position. So it doesn't matter if you're trading Bitcoin or Rivian or I don't know, Microsoft. The goal is to look at the key support and resistance levels, right? Whether you're a short-term or long-term trader, you look at that support and resistance level based on the time you're planning to hold the position. And then if the trade goes against you, not to lose more than 2.5% of your account value. This way, you know that if the market is down, 10%, 20%, your drawdown is no more than 20%, no, 10%. So that's a very important rule. If you have too many positions or your position size is incorrect, then obviously when market is volatile, this is where you can sustain bigger losses than your goals are or your trading plan. So this is the most important. I encourage you to concentrate. If you're new to trading and you're trading options, I would only do one contract, only select. All right, old school, welcome back. I have first chat in the live trade in the Discord. That's awesome. I'm excited. That's good. Join your tribe. All right. Old school, great. So those are the 2 most important rules. I did look through the portfolio market volatility, like in 2018, right? 2018 when S&P was down 20%, or in 2008, when S&P was down more than 20%. Those are some of the rules that I wrote down in my journal, right? I encourage everybody to keep a journal and have these more detailed rules that's specific to you. Some people wait 3 days, some people wait 4 days, some people wait 2 days, but the point is you have to be patient when VIX is at 30 or 40, right? And very often it's difficult, at least for me, because I'm very by nature, alpha type personality, so it's hard for me to just sit and wait. But for I would encourage you to wait for 2 to 3 days for confirmation change, right? So if, for example, today we have a CPI number. Let's say, last time I checked, there were worse than expected, market is down, but and we're in downtrend. We've been trading in downtrend since, probably January, February. So to change the current downtrend, you would want to wait at least 2 to 3 days. So if we do have, let's say, reversal in the middle of the day and market closes positive, you want to wait at least 2 more days of higher highs and higher lows to at least start talking about bottoming process, right? Because the most important question on everybody's mind is, where's the bottom in the market? Is S&P going to be down 20%, 30%, 40%? Nobody knows, right? So it could be down 20%, it could be down 15%, it could be down 30%. But to start talking about bottoming process, you need 2 or 3 days of these to confirm trend changes. So that's important, right? When market moves 4 to 5% a day. Do not break legs of spread unless you see some key support and resistance levels, right? So right now we are trading what I would consider in a bear market. Maybe not S&P, value stocks are still not in the bear market, except the value stocks, but technology, small cap, mid cap, semiconductors are traded in the bear market. So it's important to be long and short the market at the same time, because market is extremely oversold based on any technical indicators that you look. It doesn't matter if it's RSI or Bollinger Bands or Fibonacci retracement. Any type of technical indicators that are out there, market is 3 sigma, 4 sigma, 10 sigma. It only happens 0.01% of the time. So you will, any positive news, if CPI was better than expected, market would have rallied 4%. It's worse than expected, okay, then it pulls back. So it's important to be long and short the market at the same time, and look at the key support and resistance levels if you want to break the legs. But if you want to break the legs, don't go short. Don't leave short calls or short puts. I know there are a lot of followers, tasty trades, and they like to do naked calls, naked puts. This is all for great strategy, high probability of success strategy. The downside is that unless you're an experienced professional trader with very well-defined rules, you can get caught in these sharp pullbacks, right? Oil down 10% in a day. So from my perspective, don't go short, probably ever. That's at least my position. And in that regard, I'm a little bit more conservative. So you can break the leg, you can leave the long put or long call if you think that the market is going to move in your direction, but don't leave naked puts or naked calls, right? We're talking about 4 positions at a time, 2.5% account value per position, long and short the same market with certain bias, right? My bias currently is on the downside. So I'm trading either debit put spread or credit call spreads, right? Because I don't think, because I do realize that when any positive news, let's say tomorrow PPI number will be better than expected, market will be up 5%, right? Allow more time for expiration, right? If you think market will bottom in end of May or end of June, right, then don't trade July or August. Go to September, go to October. Give yourself more time. If you think S&P is going to drop no more than 20%, then assume it's going to drop 25%, right? Give yourself, and that means that your size of the position will decrease. So allow more time, allow more space. Wait for volume, right? Usually capitulations are marked by extreme volumes in ETFs, right? QQQ spiders, and extreme conditions in VIX and volume over VIX, different indicators, but usually the most basic one, VIX. Always look at ABC patterns, right? And with 50% retracements, and wait till end of day to make your decision where the market is going, because intraday, there will be a lot of hedge funds, black box trading, and market is going to trade very quickly. So, all right, market open. QQQ is down 40 basis points on worse than expected news. Spiders is fluctuating between gains and loss, actually flat on the negative news, so also positive. Since we met, the support, we did break through the support, right? The 409 level on S&P. So that's kind of the line in the sand for the market, right? The 409 level, this was the low in February 22nd. This was the low on June 18th, right? 52-week low. This is overhead resistance. For the market to at least start finding the bottom, we need to close above 410 level, right? If we can close above 410 level, then I think we are probably reaching the bottom of this pullback, and the best case scenario probably get to 430 level, right, on the upside. But as long as the market is below 410 and you don't have these 2 to 3 days of higher highs and higher lows, one has to assume that we will trade lower, right? And how much lower? I'm looking, again, I think it's more of a technical trading at this point. So I did 52-week high, all-time high, 478, 480, and then the March low of 2020, right? So we're going to March 20. We're also going into December 2018, right? These big pullbacks in December of 2018. Same pullback is in March 2020. So that's a key support, right? Long-term support, long-term overhead resistance, and spiders are basically broke through the support of 410, trading at 396. Next level is 380, right? So on the Fibonacci retracements, and one can argue we're still in the bull market, right? We're still kind of, there's still at least half of the people believe that, yes, inflation is worse than expected, but, it will subside toward the second half of the year, and we will make new all-time high. And their argument is that we're still above 50% retracement, 350 is still bull market, and 20% correction is still considered to be a healthy correction in any, bull market. We are at 17%. Probably next level would be 20%, right? That's the 380 level, exactly 20% retracement. So 380 is probably next stop. I think that's where we're heading right now, and that would be 20% retracement, and that's usually psychologically is a very important support level, right? Because there are a lot of people believe that in the bull market, 20% retracement is healthy, and this is buy the dip, right? Buy the dip mentality, which at least half of the people, I think, are still in that mindset. So that's an important support. Are we going to stop at 380 or not? We'll see, right? Short term probably, right? May, June probably will stop at the 20% retracement, but September, October, probably we're going to head into 350, right? Or it could be earlier, right? It just depends on CPI, PPI, PCE data, what Fed will say during June meeting, but that's my view on the market, right? We broke through very important support and resistance levels, and you see violent moves now in commodities, right? Commodities, the super commodity bull cycle of 2020 to 2022, we reached almost the 2018 level on oil, and then you have this pretty strong pullback last week of about 13-14% pullback. So most likely, we're not going to break through this 150, 160 level, right? We're this is a top building process in oil, similar pattern in metals, miners, steel, right? Violent moves to the downside. So is this the 25% down in XME? So most likely, this is the top, right? But this is the top. We might have another bounce back in summer, but that's what's contributing to pullback in S&P, right? Because the value stocks are also breaking down. We are right at the February low, right? February low 136. We're getting close to this the lows, and then there is really not much support below that level, right? And you probably have to do the same retracement. Next level of support would be 120, right? Which is pretty far from where the value stocks are right now. So that's value VIX, right? VIX hasn't reached any extreme levels. We're still trading below, below January high, below February high. So there's really no panic in the market, right? The kind of orderly lower highs, lower lows. Retail, especially retail retirements, one of the record inflow into the retirement funds, kind of a buying in dip mentality. So, and that's usually a contrarian sign. That means we probably haven't reached that capitulation level, at least not yet. VIX is at 33. Very important 10-year yield, right? We've reached 2018 level of 3.2%. This is a decade, not the decade high, close to decade, right? 2014, 2012. Yeah, so close to a decade high in terms of interest rate, 3.2, and it did pull back to 3%. It was as low as as low as 2.92. So it looks like yields are tapping, and even though market is selling off, yields are not going exponentially high like we had in March, right? So it's too early to say. I think yield has to drop below 2.7, right? We were at 2.92, which probably confirms that 3.2 is the top. I would probably be surprised if we break above 3.2 level, especially like today, CPI worse than expected, 10-year yield, up 0.5%. So that probably could be an indication of change in message, in the sentiment, right? The sentiment before is hyperinflation, extremely hard to contain, but we're going to have a soft landing, right? The fact that Treasury are going lower, it's probably too early to confirm that. I would probably, I would wait for at least maybe a couple more weeks, right? But the rhetoric might change that we are reaching stagflation, right? The word recession, the word stagflation, hard landing will appear more and more on the news, right? And that means more and more people will hide in treasuries, right, and move into treasuries. So we'll see. That's kind of, but too early to tell. This is extremely important level, decade high, 3.2%. We'll see where that happens. What would be the next move, and similar story in the dollar, right? Dollar, probably a decade high, right? So we're going back decade high, around 104, extremely overbought. Probably needs to pull back, right? So that's the view in the market. What else is interesting? High yield, right? Junk bonds. Kind of in a free fall, right? They're they're dropping below the pre-pandemic level, which is bearish, right? Kind of also in a free fall. That would be bearish. And then let's see what else. Semiconductors. So a lot of the stocks broke through the main support level, which is, basically showing that downtrend will probably continue, right? Semiconductors broke through the 62% retracement, right? So they broke through 62% retracement from 52-week high to 52-week low. Let's see. So probably approaching 50% retracement around 207 level for the semiconductors. And then Microsoft. I will keep in Microsoft. It just also pulled back, broke current year low, right? This is the 2024 low, and it's sitting right at the 62% retracement. It's sitting right at the 62% retracement. Probably next level is to 40. And then Apple. So the $1 trillion stocks like Apple, Microsoft, they are sitting at the Apple is sitting at the year-to-date low. It hasn't broke through this downtrend, but it's sitting at this key support, which might put more pressure on the market. And then Tesla is basically also retesting the lows of the March 14th, getting close to the lows of March 2014. All right. Any questions so far? Victor, all right, thank you. Vlad, can market resume an uptrend? I mean, what market will resume uptrend? The question is when, right? So I'm looking at the 6 months prediction. Let's look at, so we just reran, right? The 6 months prediction are running every first of the month, right, on May 1st. So support is 405, overhead resistance is 453. We're actually trading at 397, right? So the trend is turned negative, right? And I think this is the first time, because it was still bullish in March, April. April it was neutral, actually. April was neutral. Now we're in negative trend. So we need to have at least a couple months of higher highs and higher lows for the trend to change. So the trend is definitely to the downside, right? Basically, model sees that average price, we're heading to 380 level on spiders. We're already trading below the lows. So this will accelerate. So most likely, at least according to the current momentum in the market, we'll trade below 380 by October, which I would agree with the model, since we're already trading below the lows. When the model runs on June 1st and looks at the price action for the month of May, it'll probably, the next level will be around 350, 360 level, right? So we're probably heading to 350, 360 level by October. So we are trading in a downtrend, and as long as you're trading in a downtrend, market will reverse at some point. The question is when, right? And I don't have a good answer. My opinion is that it's the same as every other recession. Fed has to come out and basically say that inflation is contained at this point, right? Inflation is contained at this point, and we're starting to ease interest rates, right? We're not going to aggressively raise interest rates. When will Fed will say that? Based on the CPI data from this month, which is worse than expected, right? Core CPI, month over month CPI, year over year CPI is worse than expected. Probably towards the end of the year, if I have to guess. So my opinion that as of right now, probably till the end of the year, it's a pattern of lower highs, lower lows. Can market reach 420? Can market even reach 440? Absolutely, right? But it will be a sell into the rallies, right? Short term, I think 410 is the short term overhead resistance, and then 420. I doubt market will get above 420, 430 level, anytime soon. But the point is, my opinion, it's a pattern of lower highs, right? We did 480, 460, 440. Next high is probably 420, right? So and so on and so forth. All right, so let's zoom in. Okay, let's any other. Well, Europe was great. Thank you, Bob, for asking. We went to Greece, beautiful islands. It was a lot of fun. A lot more time and space. Great rule. Thank you, Fred. Silver is. Let's go back to some of the trades. Silver looks like is getting a bid, right? It's extremely oversold. That could be another kind of a 10-year yield negative, right? This is an argument where we're probably going into the mindset where that we're not going to have a soft landing, we're going to have a hard landing. Where do you hide? Where do you hide in the hard landing? Right, soft landing, inflation, you go into energy, you go into commodities. But in the market sell-off, usually you go into silver and gold, right, and stuff like that. And treasury, right? Treasury, silver, gold. So the fact that treasury is actually turning negative on the worse than expected inflation data, I think basically indicating that we probably are, we're probably going to change, during the summer, treasury, at some point people will realize that, Fed will not raise interest rates to 3.5% like they're planning to. Microsoft low, Microsoft low, well, right now it's sitting the key support, right? So 264, it's a 62% retracement. We're talking about multi-year retracement. So if the 264 does not hold, right, we already broke through the year-to-date lows, right? Exactly 270. So if this level doesn't hold 264, and I don't think it will hold, then the next level is 240. Right? I think Microsoft will get to 240 end of May, end of June, not sure. Establish additional hedges. Let's review the positions. We'll see. Amazon broke below trillion cap, about to break below trillion cap. Amazon is in free fall. Yeah, so if you don't have good earnings, you know, and Amazon doesn't have good earnings, then it's in free fall, right? It's, you know, it already broke through 62% retracement, 50% retracement, 38% retracement. It's heading into, well, actually March lows, right? We're heading into we are sitting right before the pandemic low. On Amazon, we're sitting at the pre-pandemic high. Thank you, Fred. Thank you, Teresa. Sorry about that, William. We'll stick to the plans. Yes, yes. It's important to stick to the rules. Let's establish trade. So let's, you know, also you have to be careful on the downside, right? You don't want to be too bearish because the market can continue trading lower, can rebound very quickly. And you know, and actually today is a perfect example. We have really worse than expected news, and the market is up, right? That's a kind of a contrarian signal that, you know, maybe a market, you know, is reaching that bottom. We don't have the signs, right? You know, Spiders doesn't have the volume. So we haven't really reached any extreme in volume, right? We haven't reached January highs. We haven't reached February highs in terms of volume. Volume is a little bit elevated, but still, you know, nowhere, you know, extreme levels. But it's, so far it's actually up, so that could be also positive. Let's see. So let's review the positions. So let's first see what are the latest trades, all of the trades we have done. I have done while I was gone. All right, so XLI, I closed XLI, right? Took a loss. XLI is kind of part of ETF complex. You know, my idea was that we are following the 2008 kind of trading pattern, right? If you go back to 2008, we're trading extremely accurate to 2008, right? 2008 had exactly 20% pullback, right? It had exactly 20% pullback, a little bit earlier than this year, right? It was in January, already 20% down and repeat in April, but then it had a strong rally, right? March strong rally of 15%, which topped out end of May, right? So the top was at end of May. So this year it's a little divergence, right? The little divergence is that the pullback was smaller in January, only 12%, and same thing in March. We did have a pretty strong recovery in April, similar 10%, not 14%. But it topped out in end of March, not end of May, right? So a little bit, not, you know, basically 2 months off. We're off by 2 months. And the magnitude is different. So I thought we're actually gonna, you know, start selling off, you know, in either end of May or end of June, but instead the top was, you know, basically end of March as opposed to end of May. So for XLI, similar issue, right? Let's look at the 52% retracement. So it broke through the lows. February, the Russian-Ukraine start of the war, broke through this level. It's trading exactly at that level right now. And there is really no support, right? This was a support. There is really no support below that. Next level would be around, 84, right? 88, 84. So for that reason, I closed the XLI. So I'm out of XLI position. I did close MRO, right? I did close MRO. I wanted to see stabilization, right? XOP, oil drillers. Again, violent move to the downside. Now I want to wait at least 2 to 3 days to the upside. But again, looks like we've reached the top, 145. Maybe we'll have triple top. Maybe we'll post lower high. But this is extremely violent move to the downside. I doubt that we're going to hold this level through the summer, right? So I think there's more risk to the downside than the room to the upside. Obviously, energy is probably too early to get too bearish, especially if we do have that rally. But for now, I closed. Just wanted to see where wait for stabilization. So I did close MRO, the oil, FCX. I did close FCX. Same idea. I think the super cycle of commodities is probably coming to an end. Can FCX retest recent highs? Probably. But again, very violent move to the downside, below 200-day moving average, below 20-day moving average. We're at February lows. At this point, I want to kind of wait some kind of bottoming process. So I closed FCX, closed XOP, right? For if you were trading premium service MRO, if you were trading the profit accelerator or dynamic power trader, then I did same thing. I did close XOP. IWM, so additional bearish trade. This is part of the spread service, right? Spread service or premium service. I did put an order to buy IWM for $1.65. It did rally, right? IWM did rally. But again, I think I'm kind of waiting. It rallied, but it did break through the year-to-date low, 187. It is trading in the bear market, right? It's down more than 30%. It's down 30%. So it's trading in the bear market. It did break through the year-to-date low, and it's trading below that level. So I doubt it's going to get above 188 level at this point. So, but it might, right? I think it will. It might on the rally. It will probably get back to 188 level. So I would be a seller into the rally. I would be a seller into the rally. So I'm buying 175, 170 put. For now, it's a little bit away. I did close Delta Airline. Right, Delta Airline is also in free fall. The theme of the economy reopening, I think, is changing, right? Even though, yes, COVID is behind us and people are traveling and record prices, but again, this idea of demand destruction. And Delta Airline also kind of just broke through the support level in free fall. I closed Delta Airline, and for that same reason, and closed Microsoft. Microsoft broke through the year-to-date low, right? And it's trading below this 270 level. So 270, 280 level, a lot of overhead resistance. I doubt it's going to get above 290 level at this point. So closed Microsoft, closed Apple. Right, I did close my Apple trade, 160, 165. Microsoft is struggling, right? It's below the support level. Already broke through the support level. Apple's sitting right at the year-to-date low, right? It's and down to this trend. So another down day, and if Apple, starts selling off, same thing. It probably doesn't have a lot of support till 135, 140. So for that reason, I don't want to wait till June. And probably at this point, May and June position, you want to close your May and June position. And I did close XLP. That's the put spread. So half of the put spread I closed. That was XLP. Start adding hedges, right? Another way to hedge if you're not feeling comfortable trading options. One way to hedge is to buy SH, right? Inverse ETF. You have PSQ, inverse ETF on QQQ, inverse ETF on S&P, inverse ETF on Russell 2000. Depend, you can do some of them if you want to add additional hedges. In the profit share accelerator or in the robo investor where you only trade in stocks, one way to trade is you just buy SH. It's trading 1-to-1, right? It's up it's up 4%, and the market is down 4% since May 2nd. I did for the premium service. I did add on another hedge is XLK 140, 130 put. Right, XLK continues to struggle. It broke through the 2022 low. Right, these are your Amazon, Visa, Apple, Microsoft trading below this level. I do have 140, 130 put spread. So this is another way to hedge. Notice I'm doing put spreads with the idea that if XLK does rally, let's say it does rebound to 50-day moving average, let's say 148, this is where I can close the short put and leave with a long put. So I'm not, the problem, one thing you always have to be careful having just a single put is that if we don't have a breakout in VIX and VIX actually pulls back to 26 or to 20, then the single puts or single calls will lose a lot of its value. So for that reason, you want to have a spread. You can have a bullish spread if you're bullish, or you can put a bearish spread if you're bearish, but that's how I would do these trades. I did close XLV, healthcare. And I think that's about it, right? And then I was here. So these are some of the trades. I don't know if you want me to go over any of the trades I closed in the past week. So if you want to have bearish trades, those are some of the bearish trades, right? I won't, right now my portfolio is bearish. So any rallies in the market and my portfolio would be down. So you want to, it's the same thing, same rule, right? Let's say spiders can reach, best case scenario maybe, get back to 430, even 440 level, right? Below 200, right? Get to the 200-day moving average, right? Maybe tomorrow, maybe PPI data is going to be better than expected. Maybe Fed will come out and will be less hawkish. Maybe Russia and Ukraine will reach some positive catalyst. I don't know what it is, but some positive catalyst, and you will have a violent market rallies, right? This pattern of ABC, right? So we've talked about patterns of ABC, and they are going to continue, right? A, B, C, right? And then you have A, B, C, right? Market is extremely oversold. It's probably due for some kind of a rebound. Right, maybe it will stop at 410. Maybe it'll be 50% retracement, right? 50% retracement between 430 and 395, 35 points is about 20 points, right? So maybe 415, right? Maybe it's probably this would be probably a course scenario, right? Course scenario that we bounce back to 420. Worst case scenario we bounce to 410. Best case scenario, we bounce to 430. ABC pattern, 50% retracement from previous high to current low, right? So previous high was 430. That's the overhead resistance. Low is 395. Any positive catalyst, market is already up on the bad news. If tomorrow PPI data is better than expected, then then you can have that 5, 6, 7% rally. All right. Yes, be careful with breaking spreads. Right now I won't break the put spread. One way we can do this, let's look at the positions, right? So let's say market is rallying, looks like 395 is support. You want to reduce your bearish position. One way to do this, on the negative news, market rallies, right? So that could be an indication that at least short term we kind of reach some kind of overhead resistance. So we can go into QQQ position, right? I still have that spread, 300 to 80 put spread, right? I bought for $9. The 300 put is trading at $23. So, and I have 2 of these contracts, so I can reduce this by closing 300 pull and roll it down to 290. If I'm very bullish, then to 285. If I wanted to turn it to a credit spread, I can turn it into 275. But this is one way to take advantage of the volatility and reduce your exposure, right? So I can do that. Let's just do that. Let me close 300 put, 1 contract. 2280. So I closed the 300 put, and now I'm basically, just reducing my bearish position, right? But I'm still bearish on the market. It's just less bearish. So I'm closing 400 put, and I'm gonna roll this down to 290 put. So basically, I was able to receive a credit, right? I was able to receive a credit of $3, right, or $4, 1923, $4. So I was able to receive a credit of $4, and I'm still bearish, right? It's still 290, 280 put spread. It's still 290, 280 put spread. So if 2 things will happen, right? Either QQQ, sorry, not spiders, QQQ. Either QQQ will rebound back to, let's say, next level of 317, right? So it can rebound to 320, maybe best case scenario 330. Then I can either close the short put or do the same thing with the short put, or I can, buy this spread back, right? I can reverse this trade, and, instead of receiving a credit of $5, maybe I can buy it back for $2 or $3. Depending on how far the spiders will go. But now my portfolio delta is less, right? My portfolio delta is less because market is oversold. No matter how you look at it. Are we in 3 down or 5 down? Bill, I'm not sure what that means. Are we in 3 down or 5 down? Thank you, Angelic. Welcome back. Or Elliot. Are we in 3 down or 5 down? It looks like we're in 5 down. Let's see. But 5 implies that this is the end of the sell. So I still think it's more of a kind of ABC pattern, right? So the way I look at it, this ABC will continue, right? You have this 1, B, C, right? And then you have again A, B, C, right? So most likely we have something like this, right? We retrace back. Probably, this has been 50. Sometimes it's less than 50%, sometimes it's 50%, sometimes it's a little bit more. But usually I count to 50% retracement. So it looks like we want to do 50% retracement and then pattern continues. Right, so I mean you can do it pattern of 1, 2, 3 or pattern 1, 2, 3, 4, 5. But 5 implies it's exhaustive and there is no sell-off is coming to an end. So I don't want to imply that. I think we are probably in the pattern B, right? And pattern C is coming, right? Spiders, same thing. Right? I mean, you could say that this is, 3, 4, and 5, but then this would imply that, we're coming to an end of the sell-off, and I don't want to imply that. So I'd rather do this. You have pattern A, rebound B. Sorry. A, B, C, right? So again, I think we're missing B, right? B and then C. So my opinion is that until VIX gets to extreme, market is oversold. It needs to pull back maybe tomorrow on PPI data. I don't know what the catalyst is, but some kind of positive news, or maybe just because it's oversold and no negative news, right? Like today, even on the negative news, it looks like spiders are holding on pretty well. Then rebound B and then dropped C. Right. So I think this pattern of ABC will continue until, like what is mind-boggling to me is that VIX hasn't reached above 38 level, right? Even though one would argue that market conditions right now is a lot worse than they were in January and a lot worse than even when they were when the Russia-Ukraine war started, right? Because everybody thought it would be over in a week, but it's not, and doesn't look like anything's getting better. So, one would argue that, capitulation is missing, right? But we had this conversation in March, and market rallied 14%, right? Towards the end of the March, right? So we had, without capitulation, market dropped to 20. So same thing could happen again, right? We could drop to 20 again, but all it means is that there is another sell-off coming, right? That's all it means. All right. What else? Thank you, Fred. Old school. Any questions on Discord servers? All right. Angelique, sorry, what was the question? Give me your link to Discord server. Sure, link to Discord server. Let's see, invite people. Edit link. All right, I put the Discord link to the to everybody in the question box. Windmills in Mykonos. Yes, yes. Windmills in Mykonos were outstanding. Very friendly country, great food, great surfing, so that's fine. John, dollar near term, I think it needs to pull back, right? And we actually have worse than expected inflation. We have, at least for now, pull back. I think it pulls back short term because it's kind of a multi-decade low. I don't know how far, but then I think it's going higher. Right, so maybe towards the middle of May or end of May, it gets to 102, maybe 101, maybe 50% retracement, but then it's heading higher. ARK continues to make lower lows. Okay, so positions. Did we go through all the positions? So what do I have right now? So we talked about QQQ, right? So QQQ spread bearish, both bullish, bearish, but bearish, overall bearish position QQQ. I am long SH, which is inverse ETF, right? So I'm long SH. This is another way to hedge. Still, I left the silver position. I think it's extremely overdone. Obviously, it's a 2022 low, but I still think there might be another rally in silver, especially if dollar pulls back. If dollar does pull back, then silver should rally. And then I do have XLK, bearish XLK position. Maybe you can actually trim XLK position. I bought it at 360. It's trading at 410. So it's about 20% profit. Let me close half of that position. XLK, limit, credit off. 410. Let's see, $4.10. I put the second order. Let's see. $7. All right, so XLK bought for 340, trimmed at 410, taking 20% profit, and then the final position closed at $7. Right, again, same idea, reducing a little bit exposure to the downside. Right. Market is up on the down day. I mean, I would wait for the last 15 minutes. It's kind of fluctuating between gains and losses. ARK is down. Looks like value stocks are rebounding, at least short term. I was in Greece, kind of hopping through the islands. John, thank you. Angelique, thank you. All right, any other questions? All right, Discord server community, thank you for participating. We have some few questions today. Super excited about that. So again, and I'm glad to be back. Go to webinar community. Thank you, Albert, for kind words. I did not ride the donkeys, no. All right. Anyone else? Any other questions? It's 9:17. Again, keep an eye. Last 15 minutes usually it looks like market turning positive right now. Energy up, silver is up, ARK is down, Spot Spiders is up, QQQ kind of back and forth. Flat 10-year yield. Also volatile. Index is back to 31. All right, that's all I have for today. Thank you very much. It's good to be back. I miss you guys. It's great to be back, and we'll see you tomorrow. Qatar, Saudi cut the oil. Do you want to return to XOP? I know. I want to wait for the support. And the problem is, you know, I mean, after this violent move, you need at least 2 to 3 days of confirmation. After, you know, you need day one. Let's assume we're going to close at the high. Then I would wait at least another day. Day two, we're at 137, 140. I think this is the top. I don't think we're heading much lower, higher, because again, I think there's a shift. I think the theme is destruction of demand, right? So Qatar and Saudi can cut the oil, and you know, I mean, if there is embargo, oil embargo from Europe, but you know, the Hungary is still against it, so I don't know when that's going to happen. So I don't know. From technical perspective, it's too early to get bullish, right? We only had 1 day of higher highs, higher lows. If tomorrow higher highs, higher lows, I might be able to get in just to squeeze, you know, a couple more dollars. But for now, I want to wait, right? I want to wait and see what happens. You know, this is a pretty bearish move, and it looks like, you know, and same thing with crude oil, right? If you look at the crude oil, right, it's just a pattern of lower highs, right? Lower highs, not lower lows, but you know. So I'd rather stay away. Thank you, Faust. Thank you, Angelique. Thank you, Albert. Guess is the same thing, right? Very volatile, so driven by Russia-Ukraine news. You know, I would want to wait at least 2 more close to make sure that this is the bottom, right? Thank you, Yuri. Thank you, Fred. All right, that's all I have. Thank you very much, and have a great day. And it's great to be back, guys.